Government bonds in the UK. Gilts is a term commonly used in finance and investing, particularly in the United Kingdom. Simply put, gilts are government bonds issued by the British government. Gilts are essentially loans that individuals or institutions, like banks or pension funds, make to the government. But why would the government need to borrow money? Well, just like you might take out a loan to buy a house or pay for college, governments borrow money to finance various projects and expenses, such as building infrastructure, funding healthcare or education, or covering budget deficits. When the government wants to borrow money, it issues bonds, and gilts are a specific type of bond issued by the British government. The name gilts comes from the fact that these bonds were originally issued with certificates that had gilded edges, giving them a fancy appearance. Now, let's talk about how gilts work. When you buy a gilt, you're essentially lending money to the government. In return, the government promises to pay you back the amount you lent, known as the principal, at a future date, along with regular interest payments. These interest payments are like the rent you might receive from a tenant if you own property. They're a reward for lending your money to the government. One of the reasons gilts are attractive to investors is that they are considered relatively low-risk investments. Why? Because they are backed by the full faith and credit of the British government. This means that as long as the government remains solvent, it has the ability to repay its debts by raising taxes, cutting spending, or borrowing more money. Another reason investors like gilts is that they offer a predictable stream of income through their regular interest payments. This can be particularly appealing for investors looking for a stable source of income, such as retirees or pension funds. Also, gilts play an important role in the broader financial system. They are often used as a benchmark for pricing other fixed income securities, such as corporate bonds. Changes in gilt yields, which is the interest rate paid on gilts, can have a ripple effect on the broader bond market, influencing everything from mortgage rates to the cost of borrowing for businesses. In summary, gilts are a way for the British government to borrow money from investors, offering them a safe and reliable investment option in return. Whether you're a seasoned investor or just starting out, understanding gilts is essential for navigating the world of finance with confidence. Thanks for watching. If you liked the video, please hit the like button or subscribe button for more interesting topics.